Thursday, the 20th of March. We're at the Council Chambers, and I'd just like to run through a few housekeeping rules just to start off. Just to check that everybody in the room and online can hear the meeting. Someone can put a thumbs up online.
Yeah.
Yeah, excellent. That's great. I just remind committee members that substitutes are required if you're unable to attend a committee meeting. The agenda pack and supplements with papers is available via mod.gov or directly from the council website from the links which are sent out to members. And just to remind members that when invited to speak, they should clearly state who they are for the benefit of anyone who's listening to the meeting. When speaking, members will need to push the left-hand button on the microphone until it goes green. It's the little button that says mic. Then switch off again when finished speaking. And advised, obviously, that this meeting is recorded for the council. And highlight any fire evacuation procedures. Basically, we'll go downstairs and meet in the car park. Okay. The agendas are now published electronically, and request that members and officers refer to page numbers from the published agenda pack or supplements to assist all in presenting the appropriate information. So, right, first of all, we'll go to Helen. Do we have apologies for absence?
Yes, there's a few apologies this month. So we've got Councillors Farber High, Councillor Hewitson, Councillor Wren, who's actually joined us online, as has Councillor Rodriguez. Councillor Woods has also sent apologies, and I think that might be it. Thank you, Chair.
Okay, thank you very much for that, Helen. Right, we'll move on to the next item on the agenda, which is the minutes from the previous meeting. Hopefully, you've all had time to read the meeting. Read the minutes of the meeting, which was held on the 25th of February. Does anyone want to raise any points from that meeting? Councillor Coles.
Just to propose them as printed.
Okay, thank you. Do I have a seconder? Thank you, Tim. Okay, thank you. We'll move on from that then. Right, declarations of interest. Do anybody have any declarations which are not already declared, obviously being a city, town or parish councillor? No, that's great. Okay. Public question time. Helen, do we have any questions?
No public questions.
No public questions. This is good. Excellent. Thank you. Right. We'll move on to the first item of the agenda, which is number 5, which is the External Auditor's Audit Progress Report and Sector Update. I'll just hand over to Nicola Hicks, who's going to introduce our speaker, David Bray. Thank you.
Thank you, Chair. Good morning, members. So Nicola Hicks, Service Director for Finance and Procurement. Just briefly introducing this paper and introducing the committee to David Bray, who's in the room with us today from Grant Thornton. You'll remember we used to have Grace as our external auditor from Grant Thornton, as David is the new Grace, as I like to call him. So welcome, David, and welcome to Somerset. So this paper, the covering report, just extracts some of the key information from the external audit report, which is attached to Appendix A, which was provided to members. I think we've just picked out and been transparent about the information in there regarding the financial statements and the value for money work, and listed again there the 2 statutory recommendations that members would have seen in the last paper, and is also on this agenda in relation to the auditor's annual report, which is item 6. So we'll go into more detail then, but really just that was not much to introduce in the paper really, and I'll hand over to David for any further points.
Yep, thank you for the introduction. Yeah, good morning. I think the new Grace is probably an apt description of apologies for the substandard replacement. I'm based out of Bristol, but I actually live in Cornwall, but I am in Bristol quite a lot, and I'm the audit manager for Cornwall Council, which, as you probably know, went through unitary status about 10 or 15 years ago. So the challenges that you're now facing, I'm reasonably familiar with. I've been with Grant Thornton since November 2012, but prior to that worked for District Audit and then the Audit Commission. So I've been involved in public sector external audit in some shape or form for over 30 years. So nice to work with you. I've had some previous involvement with you when it was Somerset County Council, and I also held the fort last year for a little bit, covering maternity leave for the Somerset Pension Fund. So whilst I wouldn't claim to be familiar to you, I'm not a complete stranger either. So in terms of our report, I'll take it as read. I'm more than happy to take any questions on that, but I won't bore you with the details and wade through every page. I think the key things as far as we're concerned is that we know where we were for the 23-24 financial statements audit. We're now looking to regain assurance and move on from that position. So we started work on our planning already, and our aim is to bring a plan to this committee in May of this year, so that the next committee meeting. So I think that puts us in a strong position for 24-25. We're also hoping to do some early interim testing between now and the end of April. So again, when we get the financial statements at the end of June / early July, we're in a strong position. We're well on the way before we're going. You may be aware that the backstop date for next year, for the current year's accounts, so the 24-25 accounts, is the end of February next year. We think that that's too tight, really, and too close to comfort. So our aim is to complete the audit by the end of December this year. And again, that puts us in a strong position for when the backstop date comes back. And I think it is really helpful for everyone that's involved in public sector external audit to get back to the timely audit reporting that we were used to some years ago. It's really not helpful when auditors are rocking up presenting findings for audits that are 2 or 3 years out of date. So that's where we are as far as the 24-25 audit is concerned. We also covered some key issues that are relevant as far as the wider sector is concerned. Again, I didn't want to wade through those in any detail, but the key one as far as we're concerned is on page 31 of your pack, which talks about the formation of what's called the local audit office, which sounds a little bit like the audit commission as was, but that's really trying to bring together the various aspects of public sector external audit. So that the local audit office will be responsible for appointing external auditors. So they'll take that function away from PSAA. And that means that the small number of local authorities that appoint their own external auditors won't have the opportunity to do that anymore. But I don't see that as being a particular challenge, because 90% of local authorities go down the PSAA route anyway. So it's just bringing the odd outlier in line with everyone else. It will take away what's called the Code of Audit Practice. So that sets out the work that external auditors are required to do. It takes that from the National Audit Office and brings that into the LAO as well. And they'll also take responsibility for setting fees, and they'll take responsibility for the oversight of quality. So I think it's really helpful to have one organisation having that sort of system oversight, rather than different people pulling auditors in local authorities in different ways. A real challenge, I think, is also to make sure that CITFA are engaged in that process as well, because the accounts are quite long and quite complicated. And I suppose there's always the challenge as to whether or not a 200-page set of financial statements for a local authority really fulfills the purpose that it's trying to achieve. But we're encouraged by that local audit reform. So I think that's an exciting development as far as local authority financial reporting is concerned. I won't take up any more of your time in terms of our update, but if there are any questions in terms of what's in the report, myself or indeed the wider external audit, then I'd be more than happy to take those. So thank you for your time.
Thank you very much for that, David. I'll open it up to members for questions, please. Thank you. Anyone have Lee? Thank you.
Thanks, Chair, and David, thanks ever so much indeed for the report. Just looking at just for my information, the audit scale fees are published amongst there. How do they compare in terms of last year against the fees charged last year, and what's it looking like for the next coming year, David? Thank you. Thanks, Chair.
I mean, last year's not a direct comparison, because we backstopped the audit for the previous year, so that's only going to be a partial fee, and PSAA are looking at that. So if you take the scale fee for the previous year compared to the fee for 24-25, then they're broadly comparable. There were 2 changes that have gone to moving that scale fee, and it has gone up. One was an inflationary increase, which we would all expect, and also last year there was a new auditing standard introduced called ISA 315 that looks at internal controls. That was an addition to the scale fee last year. It's been included in the scale fee this year. So at a headline level, there was a more of an increase than if you actually look at the bottom line. It's just gone up in terms of with inflation. So there'll be more information in our audit plan setting out clarity as to what the fees are. And it's also worthwhile saying that any variations to that scale fee do need to be approved by PSAA as well. So from a local authority's perspective, you have got that safety net in that It can't be that the auditors say, well, we want to charge this. Here's an invoice for your kind attention in due course. Any audit variations do need to be approved by PSAA. As part of that process, PSAA makes sure that officers are satisfied that the additional work is appropriate. And PSAA, because they oversee all local authorities, they do get some understanding as to what fee variations are appropriate. And where there's a significant fee variation, then PSAA will ask to see the audit file and will speak to the auditors and speak to officers to satisfy themselves that it is indeed appropriate for there to be a significant movement. So I think there's quite a good safety net in place as far as audit fees are concerned.
Brilliant. So that means we've got like a second level of governance. It really.
Indeed, yes.
Okay. Thank you. Thanks, David. Thanks, Chair.
Thanks, David. Thank you, Lee. I'll just bring Nicola on this point as well.
So just to be transparent, it was confirmed to me by Grant Thornton that the audit fee for 23-24 is 406,132. So that's what we incurred for that year's audit. But you'll remember we didn't really have a full audit because it was a qualified set of accounts, and actually there was a substantial amount of work we did with Grant Thornton weren't directly related to them signing off the accounts, but giving us a lot of assurance work around what's happening with our financial position and our financial statements. So I don't think it's right to compare the two really with the work that was carried out, but that will be in our reporting.
Anyone else have any questions? No? Excellent. Okay. Well, we're asked on the recommendation. Oh, sorry. There's two online. Sorry, I thought it was going rather too quick. Lovely. Thank you. Right, I'll bring in Lindy and then Rodriguez. So, Lindy, please. Thank you.
Thank you, Chair. Good morning, everyone. I just want to latch on because that was also my question on the fee. So, Nicola, when you say the fee was £406,000, so the initial fee then, I presume, would have been much higher. And then when the external auditors realized that we're going to use the backstop, did we then get a discount on the initial proposed fees? I would rather want to know what was the initial proposed fees versus the 781 and whether that is in line with inflation, etc. Thank you.
Yeah, unfortunately, Lindy, I don't have that information at my fingertips right now, but I'm very happy to find out and circulate that.
Thank you.
Okay, great. Thank you. Councillor Rodriguez.
Thank you, Chairman. Firstly, can I just apologise because I emailed Councillor Mike Hewitson to say that I couldn't make it last minute, not realising he wasn't going to be in the room.
That's okay. I think he's frozen.
Councillor Rodriguez, you've frozen. We might have to move on. Come back to him.
Right. We'll have to move on then. Right. So
I can, if you don't mind, Chair, I could probably guess a little question that Councillor Rodriguez was going to say was in relation to in the document in the appendix from GT, it does cite in there.
Who's back?
Oh,
you're back.
Diego, I was guessing what you were going to say because I know you emailed about some of the dates in the reports and whether members did get the invites to those sessions that were held.
Yeah,
wasn't it?
That wasn't even my question, but thanks for reminding me.
Excellent.
No, so my first thing was an apology for not being there in person. I emailed Councillor Mike Hewitson this morning, not realising he wasn't going to be in the room either, but I've got a work meeting that's been put in my diary. So I had two questions, but the third one that I didn't have will be answered anyway as well. On the, I think it was page 5 I was particularly looking at of the kind of appendix. We know obviously that we had the delay in the 23-24 financial statements, and what I want to know is really how assured are we that the deadline of the 30th of June will be hit for the 24-25 one. Conscious that's what's I worked out something like 73 working days. Is that doable? Is it feasible? I'm sure I've read somewhere on a different piece of paper, perhaps not part of this audit committee pack, that was not questionable, but an uncertainty as to whether that 30th of June date could be achieved. And my concern is obviously if we delay it again, then we're kind of round in a circle as we did previously. And my second question on the same page 5 was really just some clarification and some understanding around IFRS 16, which I have no idea what it means. So I'm hoping someone will explain around the leases, PFI assets and liabilities. I'm just wondering how that might impact the financial statement audit. Is more time required for that piece of work, for example? And it also says that for some councils that implementation could be challenging. Do you envisage that will be challenging for Somerset Council, and practically what does challenging mean?
David, I can hand that to you.
Yes. Press my mic on. So in terms of readiness, I suppose that's more of a question for officers. I suppose our observation would be that the 30th of June is a challenge for every local authority in the country. When you think of the size of the financial statements and the complexity of them, trying to pull all that together in a short period of time, it is undoubtedly a challenge. And the difficulties associated with 23, 24 are well rehearsed. So that will be a significant escalation compared to the previous years, but I'm sure officers will cover that. In terms of IFRS 16, so it's a new accounting standard. It's been around a little while in both the private sector and also in the NHS. So we've got some experience of that. And basically what it looks to do is to, at the moment, there's leases are split into two categories. So it's what's called a finance lease or an operating lease. And in very simple terms, a finance lease is where you're essentially buying the asset. So it might be, say, like a car on a hire purchase arrangement that, to all intents and purposes, it is your asset. You would say, that's my car, but you've got the asset and a corresponding liability. There's also what's called operating leases, where you don't actually own the asset, you're just paying rent for it. So that might be perhaps, say, a building or something like that, that you've never actually owned the thing, you're just paying an ongoing rent. And at the moment, they're treated separately. IFRS 16 looks to bring together the leases so that there's one combined accounting treatment. So that in itself is not too difficult. The challenge that NHS organisations that we're experiencing in local government is more around the completeness of leases. So making sure that you're able to identify all the leases that you've got. And particularly in a local government setting, there tends to be a lot of what we call peppercorn leases. So leases for a very low sum of money. Or alternatively, there's probably what in old terms we would call gentlemen's agreements, so that there might well be agreements between the NHS and local government whereby you use upstairs of the building, we'll use it downstairs and so on. So that there might not necessarily be as formal agreements in place. And that's been the challenge in the NHS is understanding what the leases are. The actual bookkeeping itself hasn't been too difficult, but it's that completeness work is where the challenge has been.
Nicola.
Sorry. So yeah, just from an internal perspective, it is going to be a challenge. There is an additional work, as David has said, in terms of leases that we are expected to achieve. We have got support from management to bring in additional capacity to help to meet the deadline. Sourcing that additional capacity is quite tricky. Every local authority is out there hunting for additional resources for closed down accountants at the moment, and so the market is quite rife. So we are doing our best to try and identify people to bring in, but obviously time is ticking on now. But Ben is on the call and is hearing audit committee's concerns, and I know we're doing our best to try and meet the deadline.
I think there's a second question about the IFI 16, was there? Is that?
That's been done.
That's been done. That's covered in that. That was all covered in that. That's fine.
Chairman, if I could just come in there, appreciate the responses. Thank you. But so my concern is really about resource allocation for the extra piece of work and actually it being done in time and not delaying the audit process as a result. But Nicola, feel free to answer the third question. That'd be great. Thank you.
So the third question, which you did email through, so I did get it right. It was you. Was around in the document in Appendix A. You questioned about there were some workshops listed in there, and had you missed a member's invite to these workshops that were held in March, and there's ones to be held in June as well. So you didn't miss them because the actual March ones were officer ones for our chief accountants, and the team attended. And Barry confirmed that he was going to chase up any invite coming out to members for the one in June.
Thank you.
Norman.
Right, got it. Yeah, Norman Cabot. Right. Having opened up the rabbit hole, David, of PFIs and peppercorn leases in particular, do you have to have a valuation on every peppercorn lease? This seems to be an awful lot of wasteful time, perhaps, because many of those peppercorn leases were to help the community in days gone by. And where do we draw a line on working on them?
Yeah, well, it's a really valid observation. Thank you for that. So the expectation is that the accounts are materially correct, and what we're finding is that local authorities themselves are applying a de minimis limit. So they're setting an internal level by which they're not looking to necessarily count for everything down to the last penny, but making sure that there's a reasonable level of accuracy in terms of the leases. So I think that hopefully common sense, which doesn't always seem to be that common, will prevail as far as the implementation of IFRS 16 is concerned. At the moment, we just don't know what impact it's going to have on local authority accounts. Certainly in the NHS, for some organisations, it was massively material. So we're talking about sort of £150 million worth of leases being brought onto the balance sheet with a corresponding liability. For some NHS bodies, it had almost no effect at all, and the lease adjustment was inconsequential. So at the moment, we just don't know, and that's where the completeness issue is. So I think what the approach that most local authorities are taking is to establish what leases you've got, and then once you know that the quantum of leases, you can then take a pragmatic approach as to which ones you do need to value and which ones can be below your own internal de minimis limit and therefore don't need to be revalued. So to answer the question, I wouldn't expect, it depends on the leases obviously, but I wouldn't expect you to need to get a professional valuation for every peppercorn lease in place, because lots of them are relatively modest sums for relatively modest issues. So again, it's making sure that you use the resources that you've got available to your disposal at the most appropriate time, and that we don't sort of take forever and a day trying to get the most accurate set of accounts ever. I think some form of pragmatic approach is appropriate as far as that's concerned.
Okay, I don't see any more hands up online or anyone in the room, so we'll go to the recommendation. The recommendation is that we note the report from Grant Thornton as per Appendix A. So we'll then move on now to. Thank you, Councillor Coles. You second that? Yeah. Okay, so we're all happy then to note the report. Okay, that's great. Thank you.
I think Councillor Rodriguez has frozen again, so I don't know if he needs to switch off and back on. Just got a nice smiley face.
Yeah, that's it. Yes.
I've been off for ages. Sorry, I didn't realise.
Yeah, at least you froze in a nice nice smile. So that was nice. Thanks. Thanks.
It was quite nice to look at.
It was, yeah. Right. Item agenda 6 is the interim auditor's annual report 2022-23 and 23-24 action plan progress update. So I'll hand over to Nicola.
Thank you, Chair. I've also got Sian Kenny on the call with me as well to answer any specific questions, and she's doing the bulk of the work in this area at the moment. So this is as you all know, members received the update against the action plan for 22-23, and now you're receiving the update against the action plan for 23-24. So of the 13 recommendations for 22-23, 9 have been completed. The remaining 4 recommendations have 4 actions that we feel have been escalated and incorporated into the 23-24 23-24 action plan. So we are actually recommending to the audit committee that they're asked to endorse the closure of the 22-23 one, and focus then on the 23-24 one, because we believe all the outstanding actions in relation to those four are actually now incorporated into the 23-24 one. We've explicitly laid this out in table 4 on page 49 of the report, where we've actually taken the recommendation for 23-24 and actually said how we believe it's been escalated and incorporated into 23-24 one. So it's worth just making sure that members are happy that you believe that that is a correct translation there, in terms of they will be worded slightly differently, and some work may have been done and an added action to the recommendation. But that's really kind of the topic for discussion in terms of, are you happy that we're with that recommendation there? And obviously then we've got in the appendices all of those actions that we believe have been completed or are in progress for the 23-24 one. So you'll see there, out of 33 actions for 23-24, 11 have been completed, 22 are in progress. But I just think it's just open it up for discussion really with members, if there's anything that you would like to pick out.
Okay, we'll open it up to questions. Liz.
Thank you, Chair. As lead member for Resources, Procurement and Performance, I really welcome this approach. I think it's helpful for members to understand where the actions for 22-23 can be properly, correctly incorporated into actions on 23-24. And if anyone else like me had to read through the appendices a few times to understand exactly where there are the actions from the previous year, and then the actions from 23-24, the actions that are completed, the actions that are still in progress, I found it a really helpful experience to read those a few times, because they give a really clear view on where we are making progress and where we need to make more progress. So I found this a very helpful approach, and would like to thank Sian for the very dedicated work that she is doing on this area for the council. Thank you.
Thank you for that, Liz. Members, questions? Right, Councillor Tim Curley.
Thank you, Chair. I always love it when we get to close something down, so I'm really pleased about that. My only question really is, how much progress were made on these items before they've been escalated? Are we coming to these completely from fresh? Are they sort of half done? I'm just wondering how much work is outstanding on them. Thank you, Chair.
Thank you. Sian?
So the 4 that are in progress and being escalated or transferred into the 23-24, if you look at appendix, sorry, I'm just trying to get it up on my screen. So it's appendix B and appendix D, which are on pages, sorry, just scrolling down the report. So appendix D is on page 10 of the paper, and that shows you that the IR5-1 and IR6, so these are improvement recommendations 5 and improvement recommendations 6, it shows that they're 50% and 60% completed. So we can then see the equivalent 50% being carried forward into 23-24 when we're looking at one of the later appendices on progress around the Ombudsman investigations, and this action has been lifted and dropped into the new action plan. So we can see a like for like. It's still only 50% in progress, but we're picking it up in 23-24 and we're monitoring it, and there are activities in place. I have conversations with the action owners every month about their progress, and this one particularly is about getting new staff trained. There's been some staff leaving and some staff coming in. But that particular improvement recommendation is escalated into a key recommendation around a wider Ombudsman recommendation, not just about training and capacity of staff. So you'll be able to see that tracking through from 22, 23 into 23, 24. The next one about benchmarking performance, 60% in progress. This is a little bit harder to find in 23, 24, but it's part of a wider key recommendation around performance. Which includes benchmarking, and that has been reassessed by the action owner. The new action in 23, 24 has been reassessed by the action owner, and the progress has been updated to reflect current position. And then the other two that were in appendix I. Oh, sorry, the page numbers. I've got the page numbers wrong, haven't I, on the pack? So appendix I, which is again page 10 of the report. So further through the report, oh no, sorry, I'm getting myself in a muddle trying to get the things up on the screen. Where am I? I'm in progress. Sorry about this. I've got the wrong pages
I think
open.
it's our page 78, Sean. Appendix I is our page 78.
Okay, sorry, I think I've gone ahead of myself though. I'm trying to find the in progress actions from 22, 23, the remaining two. So sorry, it was appendix B and appendix D. So I've just gone through appendix B, which are the two improvement recommendations that are still in progress. Sorry, I should have done appendix B first, which are the two key recommendations which are still in progress. And these are being tracked into 23, 24. The first one is around the Children's Transformation Programme. That's at 70%, but this has been escalated now into two recommendations. One is the statutory recommendation, and second is the key recommendation. And both of those actions have been re-evaluated by the action owners. So you won't be able to see the exact 70%, but the activity in relation to this action, KR1B, is clearly part of the the statutory recommendation and the key recommendation. And both of those are being reassessed in terms of progress and reevaluated, and those are the conversations that we will now be taking forward into the 23-24 action plan progress report. And then finally, key recommendation 5 around the dedicated schools grant deficit management plan. You can see that quite explicitly. It's a key recommendation again in 23-24. The 25% progress has been re-evaluated because in 22-23 the action was just about developing a plan. In 23-24 it's about developing a plan and then implementing the activities during 24-25. I hope that explains how you can track that progress and answers your question.
Sorry, Tim, would like to come back.
Thank you. It might be a silly question, but this to me was the progress. I understood the progress of 22-23. So if it's been escalated to this year, is there any more burden that is going to be added to this from other recommendations? And would that change that progress bar? So I'm just a little bit confused as to why it's been escalated to this year. Has it just been escalated as is, or has there been anything added to it? Thank you.
Sean, can I come in first?
Yeah.
Because
Yep.
I think the issue with these reports is it's taken at a point in time and we're looking backwards. So the 22-23 ones, Grant Thornton would have expected all of those actions to have been completed during the course of 23-24. They weren't. So when they come in and did the 23-24 one, they said you haven't implemented these actions and therefore we're adding to them or we're escalating them up. So it was it was an improvement recommendation and now it's a key recommendation. So the importance here is at the minute we're frantically pushing and management are pushing the organisation to get all of these actions completed, whether they're 22-23 or 23-24, because we know Grant Thornton are arriving in April to do the same assessment based on 24-25. And then that report will come forward. And what we don't want then is then another action plan with all of these in and more escalations, because we've already seen as an authority, we've got 2 statutory recommendations now where key recommendations were made in 23-24 one that we need to have made some progress and be ready for them to come in. So I think, and they will come in and do an assessment at a point in time, and we need to provide the evidence. One of the things that I push on for is get the evidence. If people have come back with, these have all been assigned to directors and service directors or executive directors, they may say, oh yeah, we're 80% Sian. What I challenge Sian goes back and challenges, right, provide me the evidence. So when Grant Thornton rock up, we've got all of the evidence listed there of why we believe this action is completed. And sometimes there is a back and forth between Sian and the action owner, because actually we're saying we don't agree because you haven't provided us with the evidence to sign it off, or you haven't met all of the criteria of this, what we believe this action point was covering based on the Grant Thornton report. So, and I don't think, sometimes you won't see that like for like, because I think they've come in and they've not only looked at have we completed that action from what they previously recommended, but they will be looking to say what else has gone on in the organisation during that year that means that action may have slightly changed, or we want to add more to it.
Rodriguez online.
Thanks, Chairman. Just bear with me, just getting the right paper up. So on the action plan, I know, Nicola, you mentioned in the report itself, it's quite clear on table 4 which actions are being escalated or carried over, whatever it's from one year to the other. However, that being said, in the action plan itself, it doesn't clearly indicate which actions have been carried over from one year to the other. And I'm conscious that what we see as an audit committee when we have these meetings is the action plan, not the report that you're providing today in future meetings. And I'm wondering if within the action plan, if it can be clearly identified which of those actions are from previous years, so that we can track it and be a bit more transparent in that particular action plan. That's the first one, please.
John, do you want to?
That's a very good point, and we're very
I can do it.
Sian can flag them on there so that when you get the 23-24 date at the next committee, you can clearly see which ones are the carry forward ones.
Thank you. And the second one, Chairman, was around the DSG, and I know we've got an item later on in the agenda on it, but just some concern really, and I know we're all concerned about the DSG element, it not being achieved 22-23. I think we've got a draft plan later on in the agenda, but also just looking at the target date for completion, we've got 29 working days to get that plan in place. Is that almost there? And I may be preempting what we're going to talk about later on, but I just want some assurance that that's not going to be delayed even further, that particular important key recommendation.
Thank you for that. I'm going to bring in Heather. Sorry.
Thank you very much. It's Councillor Heather Shearer. I'm in the room. I've got the lead for children, families and education. Amelia is also in the background, but she'll be giving more detail at the last paper, or one of the later papers today. Just wanted to let you know that yes, yes, we have been working on this for some time. We have revised the DMP, our deficit management plan, and there is an action plan which you'll see later on. I think the key thing to say is that through the last year, as we've all been going through the different restructures in the organisation, for children, families and education, and particularly for the special educational needs, statutory responsibilities and inclusion, and our relationships with schools and our educational responsibilities, which talks to the dedicated schools grant particularly, that we've been working in the last year to ensure that the transformation work or the restructuring work will actually support better efforts to have our DMP, our deficit management plan, work well. So we haven't been able to put in place any of the kind of structural changes, obviously, until the beginning of April. So we've been able to do as much as we can in the background, but some of the major workforce changes couldn't actually happen until the restructure's gone through. And that's been a frustration, but it's given us a lot of time to actually work out and do diagnostic work with external partners as well as ourselves on what isn't working. So I can be as assuring as I can be. See what you think about the report later, because that's where that hopefully will be evidenced. So you'll see the elements of the plan. So we haven't been sitting around waiting for this point. We've tried many things. I was anecdotally, and I know somebody once said to me that anecdote is not the plural of evidence. You know, I know it's only an anecdote, but listening to my colleagues in lead member positions across the Southwest, one of the things that I heard from somebody I respect massively and who has got sits atop an outstanding organisation says, we do all the right things and it still doesn't make any difference. And I think there's been a sense in the service in the last 2 years, I suppose, that we've been doing all the things that we've been required to do or recommended to do, and we've still had this increasing demand. So this time we're really working incredibly hard, as I say, with external and internal support. So I can give you as much assurance as I possibly can, but do see what you think about the report that comes later, because there's a good deal of evidence or a good deal of detail about what we want to be doing and when.
And Chair, can I just come back on that one just very, very quickly? So just for clarity then, on the action plan, the two develop a plan to reduce DSG deficit, that's currently showing a progress bar at 35% with the due date 30th of April. Is that document that's coming forth later on in the agenda, is that still keeping us at 35%, or are we beyond the 35% that's currently in the action plan?
If I may come back, I'm not going to busk that answer. I'd much rather hear that from Amelia later. I'm not entirely sure. I'm still learning as far as audit is concerned, and what the process is, and at what point in time these 35% would have been agreed. I don't know how old that particular 35% assessment is, and of course, if we're looking into 23, 24, you know, I please leave it to the last one if you wouldn't mind. I don't want to make something up.
Alan.
Thank you, Chair. I think I just wanted to highlight a couple of points in relation to the governance associated with the report. What we're getting to here is two elements. One is around the simplification of reporting associated with the AAR, and the recommendations are there to try and simplify that for Audit Committee to dive into that level of detail. So the simplification of this and being able to wrap all these things up, I think, is a cornerstone of what you're being asked to consider today, because of this issue of we're dealing with two external audit reports, or Audit Committee that are effectively retrospective because they relate to prior financial years, and also there is going to be a live assessment commencing, as Nicola has described, in April. So the complexity of potentially running three, if we don't close those, becomes quite challenging. So that, hence the recommendation to you for that review. I think equally to Councillor Rodriguez's point around assessment of percentages, I think by simplifying this report from a governance perspective, it gives you more of an opportunity to challenge the individual progress and be clear that those percentages are correct. But again, running that over three, because that's what will happen if we don't agree that today, running that over three separate reports, and then also considering individual items that you want to get into, our recommendation to you is that becomes quite complex to manage. So from this perspective, one report, one progress report that enables you to dive into the detail that Councillor Rodriguez just has, we're recommending is the right approach to give you that clarity of purpose. Running this over three subsequent years feels like quite a challenge. It's certainly a challenge for the officers involved and colleagues like Sian who do this every day. I think for members, it gives you the opportunity to be really clear and see that legacy as we track it through. So I just wanted to kind of point out the reasons for the recommendations again, just because I think we're touching on that particular point and the complexity of it. Thank you, Chair.
Thank you for that, Alan. Norman.
Thank you, Mr. Chairman. Yes, there's a thread woven through most of this meeting, isn't there? I got buried down a rabbit hole on the last agenda item when I picked up a government report and read it and realised that there was 576,000 EHCs as it required, and at 1.4 million requiring SEN. And the way forward, trying to summarise it, is not to spend money on capital, etc., but to alter the systems. So then looking at the systems that were here, I must admit I've been quite surprised to see how much change has been made in the children's programme and savings that have been made. So I think the congratulations to a degree is due to Mel and her team there. But it doesn't provide the answers, which is what I wanted, because you've got past reports. and historical. So we go along further ahead. The only question I have, Mr. Chairman, is not that. On page 71, there's a 10% progress on the transformation plan that was due 28th of February 25. Is that something that's going to be altered date-wise or what? Because it's a rather major medium-term plan looking forward and the direction of travel. It's under SR1, executive leadership team to formulate transformation savings program aligned to meet the budget gap forecast over the period 26-27 and 29-30.
I had that one written down as well when I made my notes going through Norman. So Liz, we're going to bring Liz on.
So my layperson's view would be if we'd been able to set the budget without one-off monies, this would have looked different. And I just wanted to say on the work on SEND and how we accommodate the needs of all the young people in Somerset, I would suggest going back to the budget setting papers and look at the capital programme, because Claire Winter and her team, Amelia particularly, will be bringing forward how they're using capital monies from government, which are confirmed from government, and how we can better provide facilities within the mainstream schools across all of Somerset for specific needs. So there is a huge amount of work going on. I'm really glad to have the chance to say this, because it's something like £11.4 million of government capital monies, which are profiled across the years as we can achieve those better facilities so that young people can stay in mainstream schools and stay closer to home. And that will also reduce those travel costs, where some young people are travelling, say, Frome to Taunton every day. And it's too far. It's too far. We need to do better. We need to do better within our mainstream schools. And I know from my colleague sat next to me and from Amelia Walker, I have the assurance that we are doing that work. It takes time. We are pulling forward a decision. I'll look at Nicola, make sure I get this right. There is a decision coming forward so that work can be done this summer during the holidays. So it is already in train. Thank you, Chair.
Thank you, Liz, for that bit. That's great. Alan.
Thank you, Chair. And just to pick up the specific point around SR1 as reported in this document, I think there are a couple of things in this. One is that in setting the budget and approving all of the budget papers, all nearly 800 pages of them, Appendix G, and I feel like a broken record, I'm relying on Appendix G a lot at the moment, but Appendix G effectively sets out the strategy that we are embarking on as part of that transformation plan. Equally, it also sets out those areas of search around the areas of transformation, of which there are effectively 6, plus an overarching kind of people strategy for the development of our staff, and also incorporating members into that. So that percentage will rapidly increase. What will equally then kind of follow is the SR2 actions, so SR21 and SR22. So once we have that overall framework, which is set effectively by Appendix G and the budget that's been approved at Council, we then have the ability then to turn into more of the detail, and that conversation around the development of the detail has commenced, and we're looking to complete that by June of this year. So one action will fall away as complete because the overall strategy has been set. However, the detail of that has not yet been confirmed, and clearly members have got a key role in confirming that. So I just wanted to kind of show the logic between the two. I would anticipate that progress bar leaping forward because of the approval of the budget and the establishment of those savings proposals. But I think that, to the point we made earlier, the evidence is key here. So I would anticipate, is probably the right phrase, I think the next step is the evidence there to justify it. Thank you, Chair.
Thank you for that, Alan. Anyone else? Any questions? Okay, if not, I'll go to the recommendation. I'll read it through. There's 2 points. First point is to consider progress made against the action plans, and 2, endorse the closure of the 22-23 action plan, given that remaining actions in progress have been escalated and incorporated into the 23-24 AAR action plan, which is being monitored by external auditors, Statutory Office Board and the Audit Committee. So, thank you, Chair. Right, all in favour? Excellent, thank you. Right, we'll move swiftly on to agenda item 7, Internal Audit Progress Report 24-25. I'll hand over to Alistair.
Thank you, Chairman. Good morning, councillors. Yeah, I'm Alistair Woodland, Head of Internal Audit. So this is your regular update report on the progress of the Internal Audit Plan for 24-25. I'll just draw your attention to some of the key bits of information in this report. So firstly, on agenda page 88, this provides a summary of where we are with the audit plan. In terms of the recommendations, priority 1 recommendations are continuing to drop in terms of officers are making progress at implementing those, which is good news. You will probably notice the number of priority 2 recommendations is slowly increasing. Now, in terms of our assurance work that we do, we follow up on all priority 1 recommendations and all limited and no assurance audits. In terms of if there's a priority 2 recommendation in a reasonable assurance audit, that will be down to the officers to respond to the automatic emails that go out from IdeaGen. Now, I appreciate that there's a culture change in some accounts, so to make sure that officers are engaging with that system, and it might be that some of those recommendations have been implemented and we need to chase those officers up. So we have included additional time in next year's plan to accommodate going through all priority 2 recommendations that also relate to reasonable and substantive assurance audits, just so we can make sure that the data is fully cleansed. Okay, moving on to agenda page 92 for the plan. So this is where there's been some changes to the work, and this is for me to highlight where we've had to defer some pieces of work and the additions that have come into the plan. The reasons are listed there. The ones I would draw your attention to is anything that's removed from the audit plan. Obviously, deferred is just referring to a timing change, that it's just been pushed back due to the additions coming in, but anything removed means we won't be spending time on it. And the only one I would pick up there is around the community learning partnerships follow-up audit, as those areas are being disbanded, so those recommendations are becoming defunct as that is ceasing to exist. Okay, so the other aspect of this report is to highlight any control weaknesses for you. So agenda page 94 highlights the Highways Contract Management Review, which was given limited assurance. So this was a new contract that came into being on the 1st of April 24. It obviously ties in with the wider theme that you've seen coming out from external audit and us around contract management arrangements across the authority. It is a new contract, and we have, and you can probably see there are quite a number of recommendations and 2 priority 1 recommendations there. So there are a number of areas for improvement, but I would draw your attention to the good areas that are also operating over this contract, particularly around budget monitoring, which is obviously quite key given the financial pressure the authority's in. But drawing your attention back to the 2 priority 1 recommendations, performance monitoring framework, that does need to be in place, and that is quite key to make sure that the contract is delivering what it's expected to deliver. And the other priority 1 recommendation feeds into a theme around climate change, making sure that everything that can be recycled is recycled, and also it does have the added benefit of potentially producing some savings for the authority where things are able to be recycled. The other 2 pages I would draw your attention to is agenda page 96 and 97. These are 2 follow-up audits that ideally I wanted to bring to you back in January when we did the Children Not in School audit. This would have given you the complete picture of children missing education. Unfortunately, these 2 audit reports were not finalised at that point, but it was hopefully, if you do look at the information here, it will give you a complete picture around children missing education and the work the authority needs to do. There is some work that's been progressed around school exclusion data, but there is further work to do. And so those recommendations will carry on being tracked. And as you will notice that they're still listed in our follow-up work, so we will carry on tracking. And once we get confirmation from officers that those are implemented, we will pick those up and give you that assurance that the recommendations have addressed the issues. Agenda page 96 talks about climate change, which obviously is a priority of the authority. In terms of this follow-up audit, you will notice that a lot of the actions are still in progress, and there is some change in this area, as you're no doubt aware, with the new vision document that will be going to executive. Now, the officer overseeing this area with drafting that new vision document is conscious of the theme of the reason why those issues were raised. So we're still looking to make sure that those issues are addressed through the new vision. and through the actions that are being taken. So once that vision document goes through, we'll reevaluate where we are with these recommendations and whether they need to be kept open or not. So moving on then to agenda page 99 down through to agenda page 109, gives a summary of the complete plan of works for the year. There's one aspect that I would like to draw your attention to, firstly on the counter fraud and investigation work, page 104. So there will be a separate counter fraud annual report coming to your committee in May that will give more details around the counter fraud work that's completed for the year and more details on where there are completed investigations and what has happened. Obviously, any live investigations won't be included because we won't be able to include those in that update report. The other thing to draw your attention to, which relates to a report I circulated recently, is on agenda page 106. So, as I mentioned in the email that I sent out to you, we undertake work on behalf of Homes England to give assurance around the spend on the grant money that is used for affordable housing. Now, all our information and work that we do gets uploaded into their system, and it's for Homes England to draw the conclusions. So in the email that I've sent you, I've drawn out the timetable of how that works. But what I would like to say is they have published their report for the work that we've done around the spend of that money that relates to the North Taunton project. And it was a green rated report. There were no recommendations. So that is good news, particularly as in previous years that it's come out as a red rating. So the officers that have worked in that area, pulling the information together, have done a good job to make sure they're fully compliant with Homes England's capital funding requirements. Final part to draw your attention to on this progress report is audit recommendations, which priority ones, which commence on page 110. And go through to agenda page 116. So this summarises all the outstanding priority one recommendations. Now, as I've already said, we do follow up on all priority one recommendations and check to make sure we've got the evidence that confirms they have been robustly implemented and the issue that was there has been addressed. Not just that the action was done, but the issue has been addressed via the action. So we do appreciate sometimes actions doesn't always address the issues. There are a number here that were tied in with structural changes in the organisation. And a lot of the dates were put in around the 31st of March. Now, I think it's probably fair to say that come the 1st of April, it doesn't mean that they're magically implemented. So I think there will still be some further work to do post some of these target dates, but we will be following up on those. And in terms of these priority one recommendations, all of them tie into a follow-up review. So you will get that assurance through a separate follow-up report that was summarised for you that they've been implemented, with the exception of one, which is a legacy recommendation that relates to Sedgemoor District Council around records management. So that we won't be doing a follow-up audit on, but we will be following up to give assurance that that recommendation is implemented in its own right. So I appreciate there's a lot of information in there, but happy to take questions from members.
Thank you very much, Pastor. That's very good, very comprehensive as usual. I'll just ask a quick question on the highways contract. Obviously, we'll do a follow-up, but how long do we leave it to when we do the follow-up and it's brought back to this committee? Because obviously, highways is a key one, obviously for the value and the expense, and to make sure that if they're not doing things right, we do get those payments for the obligations if they're not valid. Can you just give us a little bit of insight on that? Thank you.
Yeah, so the approach taken is for the priority one recommendations. As soon as we've got confirmation that it's been actioned and done, we will seek the evidence to confirm that's been done, and that is when we would remove it from this list. In terms of the whole follow-up process, once we've got confirmation that the majority, or we think the risk is significantly reduced in that area, ideally it would be confirmation that all recommendations have been implemented. That's when we would follow it up. So it will be listed on our follow-up action tracker to make sure that we do follow it up. But as I said, priority ones are followed up as soon as we've got confirmation they're done, which is why changes to target dates is something we do track through our system to understand what the original date is and how long they've been outstanding.
Thank you for that, Alistair. Do I have any questions in the room? Because I've got one online. Well, I'll go online to Lindy.
Thank you, Chair. My first question is on page 88. So this is now the year-end progress report, and the KPI for completed audits are 90%. It looks like the audit plan at this stage is only 53% completed. If you take into account the 34 reviews completed, 18 draft and 22 in field work. The additions doesn't completely tie up to the total figure, but that's a separate issue. So the total audits planned as per the March 2024 audit plan presented to the audit committee were 67 audits. So based on the 67 audits, it looks like a 53 completion, which is far off the 90% required completion. And then my next question is on page 91. The management comment, implementation of the findings. It's only 38% completed, the recommendations implemented and completed. 38% is really a very low percentage of recommendations completed. And I think as an audit committee, we need to, it's one of the things in the audit charter where we need to get assurance that these recommendations are indeed implemented. And I think we should set a target for management of at least a 10% to 15% increase in implementation of the recommendations at the next audit committee. Ideally, I would like to see at the next quarter at least a 50% implementation and then a 60%. I do understand that some of these recommendations might take a year or two even to implement, but we cannot, as an audit committee, accept only a 38% implementation rate. Chairperson, I've got two more questions, but I'm going to pause there for answers. And then if you will allow me back to ask my last two questions. Thank you.
Thank you, Lindy. I'll get Alistair to answer that and then we'll come back for the other questions. Thank you.
Thank you, Chair. Yeah, firstly, in terms of completion, so this report is dated from the 24th of February, so we're not quite at the year end. There are a number of projects in the audit plan that are running for the whole 12 months, so April to the end of March. So those will automatically be finalised at the 31st of March. What I can assure the Audit Committee, there are a number of reviews that have moved on since this report was actually published and have been finalised. So yeah, our target is 90% to draft or final for year end. And so that's what our outturn report that will come to this committee in March will show where we are. In terms of the second question around the percentages on recommendations and overall implementation, as I say, in terms of what I mentioned earlier with how we track through idea gen, priority ones are the ones that we focus on and limited and no assurances. In terms of getting the update information on reasonable or substantial assurance audits where there are some recommendations, we don't actively pursue officers on those. So as I mentioned earlier, those are the ones where we've added time to next year's audit plan to pursue those officers to make sure the information in idea gen is up to date and the records are complete. So at the moment, I would say what you're seeing is probably the worst case scenario from a percentage basis. But as part of our annual report that I'll be bringing to your committee in May, that will also have an update where we will be chasing all officers, so it will give a more accurate picture.
Okay, thank you for that. Lindy, would like to ask you further questions? Thank you.
Thank you, Chair. If I may ask then at the end at the end of March, if we can maybe get a confirmation via email from internal audit at what the percentage of completion is so that we can track with how close we are to the 90%. And thank you for the answer on the outstanding recommendations that needs to be implemented. And I hear you on priority one, but I don't think it's internal audit. It's not their responsibility to actually take accountability for this. It's management that should give us assurance that they are working on the priority 2 and 3 findings as well, and that they are updating the system. My last two questions is then on page 92. I don't know the sensitivity of investigation and if more details can be shared on the addition request for investigation. And if not, I do understand. And then on risk management on page 92, it says it is deferred due to proposed changes to the strategic risks. So just a general comment, strategic risks, it's a live document. It can change daily. So deferring it because there are changes, it's just a question, shouldn't we then rather look in when we do the planning in which quarter we are doing or planning to do the audit, that it coincides with strategic risks. I know strategic risks might change every year, so shouldn't we have planned this audit for Q1 of last year? Meaning that strategic risks often linked to the performance plan, which is only approved at the end of the financial year for the next year. So you will have a change in strategic risks more or less at this time. So this audit should have been done at Q1 last year. That's what I'm trying to say. And then on page 90, the highway contracts, page 94, I assume, and correct me if I'm wrong, that highway contracts will result in quite a significant amount of money to be spent by this council. And again, if I'm wrong, it looks like these contracts have been operating for a whole year without any approved KPIs, which is very dangerous. And I mean, if it's a month or two, but a whole year operating without any KPIs. And if you look at the further comments made on page 95, that the previous 7 contracts were ended due to good performance not being achieved. This is quite worrying that the lesson wasn't learned from the previous contracts and that still there's no KPIs in place as we speak. Thank you, Chairperson.
Thank you, Lindy. Alistair.
Thank you, Chairman. So picking up on those questions, in terms of the investigation, as I say, there will be some summary information coming to this committee in the Counter Fraud Outturn report in May. Obviously, ongoing live investigations, we can't share any information while that is going on for risk of data leak or information leak that could damage a potential prosecution at a later date. In terms of risk management, so in terms of it pushing back, there's quite a fundamental change to risk management. Of course, risk management should be live and strategic risk can change. That's how risk management should work. But there are some fundamental changes happening to the risk management framework in this authority. So for us, we've agreed that we would push it back. It is scoped out and ready to schedule, but we're also conscious part of our review is aligning it similarly to ISO 31000, which is the industry standard for good risk management. And in terms of that framework, that does also have an impact in terms of going down through the organisation with risk management. And given the restructure and the changes, that would also have an impact on how well perhaps risk management was doing. So we have moved it back for those reasons, because it's a quite fundamental change to the way the organisation is looking at managing risks. And then on highways contracts, I guess I would just agree that yes, ideally, absolutely why we've put it in there as a finding that KPIs should be in place from as soon as the contract starts, and given the reasons for why the other contracts ended and performance, that's why it's in there as an issue, and it's why it's in there as a priority one. So I absolutely agree with what the independent members were saying.
Thank you for that, Alistair. Right, I've got Rodriguez online, and then we'll go to Councillor Lee Baker. So Rodriguez.
Thank you, Chair. Just a couple of ones from me, just for clarity, really. Page 100 and 101. On 100, you've got in draft review stage, Life Factory, Glastonbury, and apologies if I'm getting confused by the document. And then you've also got on page 14, and sorry, the next page, Glastonbury Town Deal projects in progress. Just on those two, could you give me just an update on that? When will it come to audit? Does it come to audit? Is it going to carry on to next year? I'm just a bit confused as to how this works.
Alistair, could you give some clarity on that? Thank you.
Yeah, so the Life Factory Glastonbury is an audit that was focusing on just the Life Factory project relating to the Glastonbury Town Deal Fund. The Glastonbury Town Deal wider work is a piece of work that's looking right across all the projects in the Town Deal as part of the grant claim process that the authority goes through, where it draws down the money from MHCLG. So it's giving that assurance that the spend is in accordance with how it should be. So the 151 officer can sign it off and draw it down. Those reports, when available, will come to the audit committee.
Okay, thank you. And last one, Chair, just on local community networks, which I think is 101. I think it was 101. I only wondered, it says in progress, I wondered what input councillors or chairs of LCNs are having into this process, or link officers as well. I only say because as a chair of one of the LCNs, I've not had any contact, but maybe I shouldn't have any contact. And I also understand that link officers are probably having limited input so far. So I'm really wondering what the scope of that is and who's involved in kind of your audit process for that.
I don't think that's that one, Alistair.
Thank you. I mean, if it's easier, happy to circulate the audit brief for that piece of work to councillors so you can see. Yeah, that audit is still in its infancy in terms of progress. I know there's a lot of work going on in that area. So in terms of getting hold of information, it's been a slightly more of a challenge for us, but I will circulate that brief for you.
Thank you.
Thank you. I'll bring in Alan on that topic as well. Thank you.
Thank you, Chair. And just to provide additional information to members, the review of LCNs and our overall approach to community engagement was a key feature in our corporate peer review, which is a matter that's being considered by corporate and resources scrutiny next week and then into executive into early April. In addition to that, there was also a broader review of LCNs that was requested by executive into corporate and resources scrutiny as well. So there will be a fuller opportunity for that engagement. But again, that hasn't been fully scoped, and the engagement of members and link officers and those engaged in LCNs hasn't been determined at this stage, but I'm sure it will kind of be incorporated as part of that process. Thank you, Chair.
Thank you for that, Alan. Lee Baker, you're on.
Thank you, Chair. Thank you. Alistair, thanks as ever for an excellent report. I just got a couple of queries on pages 110 and 111, where we're running through the Children's, Families and Education Priority Action 1s. On all of them, in my opinion, I might be wrong, it's a little bit ambiguous in terms of all the actions on page 110, 111 have the same update, March 2025. So children's DMT arranging session to run through outstanding actions, children's DMT arranging, etc., which to me is a little bit ambiguous when I'm trying to sort of see where exactly we are on each of those priorities. Is there any sort of, so when we're looking at sort of smart actions, so specific, measurable, achievable, time-bound, etc., is there any sort of more information you can give us specifically on where, you know, updates on those categories? Because just saying there's going to be a session to run in outstanding actions as resolved as many as possible is a little, to me, it's just a little bit woolly. So where are we with all those, you know, those individuals, if that's all right, Al? Thank you, Chair.
Thank you, Alistair.
Thank you. Yeah, so I think the wider update on the EHCPs was provided by the Children's Director in the December meeting around them and the action they were taking. In terms of the updates that we requested and asked for, we were told that they were looking at them and we'll be looking at them in DMT to make sure that action is being addressed for those issues. So that's why that information is in there. I don't have any further information to provide to you at the moment. Once we've got confirmation they're completed, obviously we will look into them and I will be in a better position to know exactly what has been done and whether it addresses the issues. What I would say, just on the PRU ones in particular, that I know a lot of work was done to address the issues or mitigate the issues to a large extent while not fully completing the actions. So that is obviously in for a follow-up audit for next year, and we'll be looking to give confirmation that those actions have been completed. But at this point, I couldn't provide you with any further information.
I think we've got some further information. Hot off the press, I'll hand over to Heather.
There's a reason why I turned up. It's not just the good company. No, you're absolutely right. And I think I probably didn't explain it very clearly to an answer to one of the earlier questions, which is that a good deal of our kind of Children's has been working on a transformation programme for the whole year that I've been involved with it as lead member, and that idea, and it's a multifaceted issue when you look at the DSG, so the dedicated, this dedicated schools grant and the deficit management plan, which is, you know, the later content specific report. You'll see how many levers you have to pull to make things work differently. And all departments are the same, I'm sure. But I think I said earlier on that a lot of our desire for change, our need for change, is around that special educational need, inclusion and education piece. And that was probably, those areas were the ones that had the most significant personnel restructuring changes through the last, that whole blueprinting restructure stuff we just did and reported to full council. Far bigger changes in structure than, say, in social care within children. And a little bit in commissioning, but basically it was in that education send area. So a lot of things we have been working in the background on, and we haven't really been able to go public with a lot of it until all of that restructure work was done. So the DMT work, the departmental management team, as it were, that work has been going on to both anticipate, set the scene for the changes that might happen, or will happen, we hope, will happen. The people whose jobs have changed, who sit in jobs that may no longer be there, or we're materially changing them. A lot of that work's been going in the background. There's also been a couple of new changes with the new government around, say, our preparation for things like the Children's Wellbeing and Schools Bill, which, if it comes to fruition as an act, will have impact on all kinds of things, including some of the things we've talked about on children missing education. It's a big plan of that. So we've been trying to kind of check that the structures we're putting in place are going to work, and any restructure, particularly around if jobs change, you have real people in there who we have to manage and support if their jobs are changing or trying to fill vacancies that we've created. And then also the other thing that we're working on is a more locality-based model of delivering our services. So it's not all kind of, Fortress Taunton or Fortress Yeovil that we're actually getting into. So we're doing all of that in the background, but we can only now start going public with it, as it were, because of the sensitivity around people. So I think there's that bit. The PRUs, the referral units, again, in the year I've been involved with them, there are changes that we need to make and improvements we need to make with our pupil referral units, not just in the delivery of what they do within the building, but the relationships that we have to have between schools and us, for who's referring them in and why. And that's been part, again, our ability to try and, they never get resourced enough because there's never quite enough money coming from the government, but we need to be managing, supporting them, let's say not managing, supporting them much more closely. And again, Amelia has ideas, we have ideas about how we might want to arrange that better so we can guarantee that the service they deliver is better. But again, this is all part of the melting pot that we're working on, and we don't always own them as such, so we have to work with them as an influence.
Okay, thanks ever so much, Heather. As ever, you've given an excellent answer and reassured me totally. Thank you. Right. Thanks, Chair.
So you do have another question? No? That was just lovely. Okay, excellent. I don't see any hands online or any in the room. Oh, no, sorry, Norman. Yes, I've got Norman down. Yeah.
How could you forget me? Really, this is page 90. It's on the non-risk items, and I suppose this is not really one for you, Alistair. More for ourselves in the county. The area where there's no audit coverage is planned assurances will be sought from other sources to provide a holistic picture and the risks, the key risks. What I'm particularly concerned about was the line that is health, safety management, strategic planning and direction is, so the strategic planning, for instance, covering phosphates just recently. And this is something that has been costing hundreds of millions of pounds, and we now have potential to move forward with it. So how are we assessing the risks that this will bring with it and how it will affect other things? It's one of those that I think we need to pay a great deal more attention of and have a much higher profile than perhaps it has had in the past.
Good question, that Wayne. I don't know. I'm not too sure who would. Alan, would you like to?
Sorry, Alan.
I think in fact, I'm going to dodge this one, unfortunately, Councillor Cavill, in the sense that I think part of this is is when we have that additional clarity, I think we can then work out how we review that governance, what the right steps are, and also what the role of audit committee, and more importantly, in some areas of development of policy, what the scrutiny role is as well. So I am going to dodge the question because I think it is so unknown. Until we've got that additional clarity, then we can work out the respective elements that need to be reported and considered there. But I think you've posed us quite an interesting question that I need to take away. Thank you, Chair.
Thank you, Mr. Chairman. It is an elephant in the room that it needs moving.
What we'll do now, we'll get a second opinion from Liz. Thank you.
This is no second opinion, but it might be an interesting comment that we have already had to consider what happens because we've had parts of Somerset that have not been affected by nutrient neutrality. And you will have noticed in the budget setting paper, the capital programme, that we've brought forward the school for Wilstock, which is an area where building has not been affected. And we've also brought forward the additional classroom for Puriton, which is another area where building has not been affected. So we understand the impact. We know where we've got to work on such things as sufficiency of school places. And there are lots of other things too, including, of course, all the rest of the infrastructure like highways. So I think that we've got a model in Somerset, because not all of Somerset's been affected, but that could now play out much larger, and it will impact on planning as well, of course. And I'm looking at a chair of planning as I say that. So I think that we do know what lies ahead. It's the scale and the pace at which it happens that we need to pay particular attention to.
As a comment, I think it would be quite reasonable to say that officers and members are working very, very hard to get that speed right, because it's been a long time coming, the solutions, and we now need to move forward at pace, and we are attempting to do that at pace. Okay.
Thank you for that, Simon. Thank you. Okay, right. We'll go to the recommendation, and the recommendation is we note the position of the 24-25 internal audit plan. Thank you, Chair. Sorry, thank you, Simon. I'm the Chair. Thank you. We're all happy? Okay, great, lovely. Thank you. We'll move forward. Agenda item 8 is the internal audit plan charter 25-26. So over to Alistair. Thank you.
Thank you, Chair. So yeah, this is the plan and the charter for 25-26. The first thing, if I may, is just start on the charter. So the internal audit standards that we have to follow are changing. I think there was an update session that was run for you probably 12 months ago going through it. And I know not all members of the committee could make it. I will be looking at circulating more information for you as well, so you know how internal audit should be working in the public sector and how you can hold me to account in terms of how we're operating and the way we're operating. So the charter has been updated to reflect those changes. Those changes come into force on the 1st of April. So going then on to the audit plan itself. So obviously there's quite a wide consultation process that we go through in terms of putting the plan together, seeking views from many officers and members where possible, because obviously everyone has a slightly different view on risk. We obviously review a lot of information as well to understand what is going on. And we want to make sure the audit plan has got the right balance in terms of breadth and depth across the organisation, particularly with all the risks that are going on. So in terms of how we pull the plan together, those are summarised on pages 123 and 124. I don't plan on spending too much time looking at that. I'm going to spend most of my time just talking through what is in the plan, so you're aware of some of the big areas that we are planning to look at. So this is on Appendix A on page 129. So there are a number of core governance areas there that we would like to look at, and they've been on our radar for a while. I know there's been changes going on through the organisation, but from an internal audit point of view, these are kind of some of the bread and butter areas that should be in place and should be operating effectively in a healthy organisation. I know there was conversation in January from some of the members around emergency planning and flood response, so that is in there as well. Moving on to agenda page 130, so some of the financial management work that we're looking to do. So we did a lot of work in 23-24, looking through the core financial routine financial controls. We're now moving more to the cyclical programme of looking through and looking at key financial systems on a cyclical basis. These are the ones that we're looking at for 25-26. Then agenda page 131, the ones I would highlight here is mainly the demographic financial pressures. As you've obviously heard from, and as no doubt you're aware, some of the biggest challenges for authorities dealing with those demographic pressures. And it wouldn't surprise you that the LGA recent report also identifies authorities that do well, the ones that can manage those pressures well. So we have got a piece of work in there that will follow on from the budget setting audit we did in 23-24, where we did look through modelling and scenario planning of what the authority does around its budget. Counter fraud work is there as well, so I'd highlight that and say that obviously we are responsible for receiving those referrals that come into us, and as I've already mentioned, you will get more information on the work we've done in 24-25 around counter fraud in the update report that will come to you in May. Moving on to agenda page 133, I'll just highlight the school conditions survey audit that was in there. So as I mentioned, in January there was an outstanding priority 1 recommendation that was fundamentally complete, but it's going to take 2 years for them to go through and get the school data up to date, and we agreed that we would say that recommendation is closed and replace it with an audit to make sure it's on track and is operating, so that is in there. Other ones to point out, agenda page 135, homelessness and temporary accommodation. Obviously, pressures around those areas, they're quite important for us to look at. There is a line in there for around nutrient neutrality, so we do have some time in at the moment for that, although that is undefined, how we might spend that time, but we recognise it as an issue. Regeneration is also in there. The authority's also got a number of regeneration programmes ongoing, and Gravity being one of the large regeneration programmes, so we have that project in there, which will be our continued project support on that, but as also including some defined time to focus on particular areas, and as it mentions there, looking at around the investment plan, particularly with the predicted income that that site will generate for the authority against its borrowing. Other areas to pick up on page 136, which I know has been raised in the audit committee, is around asset disposal and debt impact from that. So there is time in for us to look through that and provide an update to this committee around that. So that is the plan that I'm asking for you to approve, Appendix A. And as I started the conversation, Appendix B is our charter. So, you know, the purpose of a charter is there to define how we operate in the authority and giving us authority to have access to all your records. In local government, we're slightly also protected under the Accounts and Audit Regulation that gives us a statutory right to all records and information that we need to complete an audit. But this outlines how we operate functionally and operationally. And as I say, it's compliant with best practice, so it should, I say, be okay for you to approve with the changes that we've made, given the changes to the internal audit standards. I should actually just point out there was one there that I did miss, which we do have time in for the transformational programme, which is obviously quite topical given how important it is to the financial sustainability of the authority. But happy to take questions from members.
Thank you, Alistair. I've got Councillor Coles.
Thank you, Chair. Yes, I thought it was a very comprehensive report, and as you say, Appendix B is your charter, so that's a fairly simple thing to agree. I'd like to thank you for the comprehensive report and propose that we accept both A and B, Chair.
Thank you. Before we do that, we've got online, we've got Lindy and Rodriguez. So I'll go to Lindy first. Thank you.
Thank you, Chairperson. My first question is on the plan. I don't see any hours for the 25-26 year. What is your available hours? Meaning working out per staff member that's on the internal audit team versus the hours, the audits that you've planned. And then on the strategic risks, I see you do link to strategic risks. I might be wrong, but I've been looking for the last, not the transformation risk register that we saw quite recently, but the last time I saw the strategic risk update to this committee was in August 2024. I might have missed it. I did look through it, but I might have missed it. So my question is, obviously you're using an updated strategic risk register, But seeing that we are responsible as an audit committee to oversee the strategic risks and whether it's properly mitigated, and that the whole internal audit plan is mainly based on that strategic risk register, I would have thought that the strategic risk register would have come to this committee either in today's back or a bit more recently, so that we can give assurance on that risk register that's being used for the preparation of the internal audit plan. And then my last comment I wanted to make is the internal audit charter, page 139. It was quite difficult to follow if there were quite a few changes. So I assume this is the final change document that's before us today. But it's difficult to compare if there's not a tracking maybe in red on what those changes were, comparing it to make sure that we're happy with the actual changes. Just a comment on that. Thank you, Chair.
Thank you, Lindy. Alistair.
Thank you, Chair. Yeah, so in terms of the audit plan, we don't do hours, we do days. So your audit plan is equivalent to 1,700 man hours. In terms of the risk register, there is a link at the top of Appendix A that you can click on. That will pull you through to an Excel document in our audit board system, and it does show the link to the risks. It would also show you the link to the proposed new strategic risks that are going through at the moment, and also links to transformational risks. So there is a document that provides all that information. In terms of risk management coming to this audit committee, obviously that's not a question for me to answer. And then in terms of page 139, yeah, I do note your comment in terms of changes. There were quite a few changes, mainly around reference to public sector internal auditing standards. Now it's the global auditing standards, GIAS. I guess in some ways, I don't usually look at bringing a track change report as a public report, but I'm happy to circulate something in the future outside of the committee in advance so you can see those changes and what's been made.
Thank you, Alistair. I've got Liz.
Thank you, Chair. The work of the Performance, Risk and Budget Board and the work that has gone on with the restructure of the staff are relevant here, because the team that is led by Sarah Credney now includes a role that is taken now. And a lot of this, of course, is, as Heather has already said, from the 1st of April. So we're in that last stage of all of the roles being confirmed with names of officers against each role. And it has been a really sensitive time, and I think we have to be aware of that. So Sarah Hawkins is taking on a role. There is another role that will still to go out for recruitment. Pam Pursley, who members of this committee will recall from her work on risk, is now, I believe, reporting to Sarah Hawkins, who reports to Sarah Cretney. So we will have that staffing structure in place, completely in place very soon. There is paper, more than one paper, coming forward now on strategic risk and the risk appetite of the council. I need to confirm the dates on which that comes to, presumably this committee first, which could well be the May date, and then when it comes to the executive after that, which could well be the first week of June. But please allow me to confirm those dates. And I think what we should do is ask that this committee be updated as soon as possible about what papers are coming forward, when they come to audit, what route they take after that. I'm sure executive is correct, but whether they also need to go to full council, I don't know yet. But the work, it's like everything else, the work is ongoing. It's been a really sensitive time because of officers who have had to apply for roles, have been in ring fences, further redundancies, it has been a sensitive time. So I would just ask members of the committee to bear that in mind.
Thank you for that, Liz, and I'll bring in Alan as well. Thank you.
Chair, just really quickly, just to confirm, when committee last considered the strategic risk report, that was on at your meeting on the 12th of November. You considered strategic risk alongside the improvement transformation programme risk register. Thank you, Chair.
Thank you for that. Rodrigo.
Thank you, Chair. So just for me, because I don't understand how the process works entirely, in terms of the 24-25 ones that were in draft of progress, how does that fit in? Do you carry on with that anyway, or is that added into this one?
No, we're committed to delivering everything in 24-25 audit plan, so those projects will be completed.
Okay, and my second one was only two, Chairman. Obviously pleased to see a number of them on there, particularly pleased to see the asset disposal and debt management impact. There's obviously lots of risks and proposed reviews. I'm only wondering, do they come to audit in any particular order? Is there a priority order, or is it just as and when you choose, or what? I'm just wondering about that particular process.
So there is, in terms of putting the audit plan together, there is a timetable of roughly what quarters the work is looking to start in. I would say the quarters that they're scheduled for are when we would like to start the work. In the world of internal audit, there is obviously a lot of conversation on whether the annual plan is actually dead or not, in terms of whether it needs to be a completely live rolling plan given the period and pace of change that's going on in organisations. So what I'm saying is we've got projects planned for various quarters throughout the year, but we will recognise stuff that's probably planned for quarter 3 now sometimes can be shunted back due to operational issues that come up. So the plan is and will always be as flexible as possible to accommodate things that come up and to make sure that when we undertake the work, it's offering the most value, particularly sometimes if we're going to come and do an audit and there's going to be a massive change in that area. It could be actually, can you help support that change through consultancy type work, or can you come and give assurance once we've done it so we know what we've set up is working effectively? So there are a lot of considerations taken into account, but there is a plan of when everything is scheduled to take place. And again, it should be on the link, I believe, for our report that would take you through to our audit software system.
Thank you, Chair. And if I just quickly come back on that one point, if I may. So, for example, you mentioned, for example, something in quarter 3 may be moved if something was to come up. So is there, in that link that you've mentioned, are these prioritised?
Yeah, we do operate a priority system. So they are ranked high, medium, and low. We keep it quite simple. We did have something more complicated once, but it seemed that it was hard for people to understand and hard for us to keep on top of, but there is a simple high, medium and low. And again, that's in our audit software system, so you can see which ones are ranked as high priority.
Thank you.
Thank you, Alistair. Lindy.
Chairperson, thank you. Maybe we could have included a summary on the changes of the charter and not necessarily the charter with the changes on the report, but I would welcome then some update or that report sent through by email. With the strategic risks, something I'll take up maybe with the chairperson to include for next year more updated strategic risk register coming to this committee to be able to base that risk register on the internal audit plan on that risk register. And then the last thing is on the hours, 1,700 man hours. I would like to see, maybe it can also be circulated via email, how this 1,700 hours are allocated between the new planned audits. And that could give us an indication per audit whether we are still on track during the year based on the actual hours spent versus that what we approved then with this new internal audit plan. So if I can get a drill down of how these hours were allocated per audit. Thank you.
Alistair.
Yeah, so to confirm a breakdown of the time budgets against each audit, which, yeah, that's fine, and the track changes for the audit charter.
Okay. Norman.
Thank you, Mr. Chairman. Page 136, we've got digital advisory, ethics and the use of AI. With our transformation and the systems that are being brought in, I can see us rapidly progressing at high speed in considerable usage of this. And it's a program that we all know in AI is developing daily. I can see that being a huge piece of work for you. I know you've got it as advisory, and it's to check that we are being ethical and the program's in there. But I'm just wondering how you see the future of that and how Grant Thornton are going to be actually covering it, really, and SWOT as well.
Alistair.
Yeah, obviously AI is a big thing at the moment. There are various places the authority is obviously looking to use it or is using it. So yeah, in terms of the review, when we hold the initial meeting, we'll be looking to scope out in more detail. So I'll probably be able to provide more detail of where that review will be going once the initial scope has been completed.
Liz, yes.
On the subject of AI, it is a much, much greater concern for people working in the creative industries than it is for people in local authorities. There are massive benefits. I do already use it to summarise long documents, but the ability for an actor, for instance, or a writer to sign a contract that then gives their voice, their physical appearance in perpetuity to another person is proper scary when you read the issues that about in the film industry and the theatre industry and for writers. So I think you're right that it's something we all need to keep our eye on, because we need to understand if any of those implications might come the way of a local authority and the people for whom we have a duty of care. Thank you.
Thank you for that, Liz. Norman.
Yes, I was purely on the side of the business use of AI. It's a sentinel device at the moment to a degree. It's crossing the borderline by dodging, not giving an answer, using the information it's got available to it to give an answer, which doesn't necessarily mean it's a correct answer. So there's problems there already showing up, and as it progresses, as it will, I just have concerns that we may be open to an awful lot of problems in the use of it.
Okay, I think we've given that a good airing today. I think we'll go straight to recommendations, which we ask the Audit Committee to approve the Internal Audit Plan 25-26. And also, the second part, obviously, is to approve the Internal Audit Charter. Councillor Cole's proposed it. And we got Tim Cody seconded it. All in favour? Great, thank you. Right, when we've got down a comfort break. Do you want a comfort break or do you want to carry on? Carry on? I know you've got to shoot off in a moment. Yeah. Carry on, yeah. If you would need to shoot off in a minute, I understand that, and I can. Lee can take me home. Thank you. Right, so we sorted that one out. Right, agenda item 9, Treasury Management Quarterly Update Report, Q3 24/25. Nicola.
Current year. So yeah, this is just an update report for the Q3 as stated. Main thing to note is that all Treasury activities remain within the agreed prudential limits, and that they are managed and balanced against the yield. But yeah, just happy to take any questions on the paper. Really nothing really to go through in the paper. It's all in line with our strategy and all compliant.
Right, I did notice a couple of just good points that the borrowing is down 42 million on page 151, which is good. We're using less money. And also the interest, the budget was 33.661 million on the bottom of page 151. Up to the third quarter, it's 20 million. So I worked out pro rata, we should be about 27 million for the whole year. So that'll be like a 6 million saving. If that's right, that will go to the revenue account, because obviously interest goes to revenue. So that should actually help us on our outturn, if I'm correct. Thank you. Liz.
So we have seen that benefit in month 10. When we get to the month 11 budget monitoring, that will be like a provisional outturn, and you'll see it again then. But there is a warning that the last months of a financial year, the council needs to take out more borrowing because less comes in council tax, because most people pay in 10 months. That's the only word of warning.
That's a good point, Liz. Anyone got any questions before we go to the recommendation? Lee. Right.
Just one question. I do ask this regularly, Nicola. Our Treasury advisors, Arlene Close, who we respect. I shouldn't laugh because I do respect and enjoy their work. Are you, as in your position and Maria's position, are you happy with the advice that they're giving us as a council?
I am happy with the advice they're giving us. We have a good relationship with Arlene Close, and they have that contract with Arlene Close has actually just been renewed. So they will remain our Treasury advisors for the next 3 years.
Right. Don't see any more questions. Right. We'll go to the recommendation. We're asked to note the end of December 2024 borrowing and investment position, and that all Treasury activities have been carried out in accordance with the approved Treasury management strategy within the prudential limits and in line with the full delegations to the section 1115 officer. Thank you. So, and second, right, okay. All in favour? Yeah, excellent. So we'll go to the I think it's going to be a bit more of a chunky item. The next one is obviously the dedicated schools grant and deficit management plan update. We've got Amelia Walker. Hi, Amelia. Would you like to present? Oh, sorry, Heather. I should have brought Heather in first. We might just do a brief introduction. Sorry, Heather. Thank you.
I don't get many gigs, so it's quite nice to get the spotlight when I can.
Sorry, you weren't on my chair's thing.
No,
so
it's absolutely fine. And the star of the show is going to be Amelia anyway. So no, I'm personally very grateful that this is coming here. The dedicated schools grant has been, or the deficit within our dedicated schools grant has been a problem for a long time for an awful lot of councils, or feels like a long time. And unfortunately, in many councils, it doesn't get any kind of airing, or it gets forgotten about. And that's so. And Amelia can talk more about it. But historically, it has been something where it's been recognised nationally that there are the needs and demands for those children that we have who've got special educational needs is outstripping the amount of money that we get from the government, and the cost of meeting those needs, genuine needs, we cannot meet from what we get from the government through the schools grant. So the high need, you'll hear a lot about the high needs block being the big issue and area of concern in the paper, because we don't, we've been running with a deficit, and because this has been, and it is an incredibly difficult problem to solve, as all of the wicked issues in society are, it hasn't been grasped by previous governments, and they've allowed this thing called the statutory override, which is a way of acknowledging that there is an overspend in an area without, I think the term Sean used to use is crystallising, or Nicola, it doesn't get crystallised in the accounts, it doesn't show, but it is still there. And so it's incredibly important, and we've talked about it already this morning, how important it is to find a way of reducing the overspend, or at least curtailing where we can. Not least because if we do it well, we also provide better services to our children. But there's a real pressing need. So I'm not going to say much more than that, except that I'm grateful for the chance to air this. It's certainly, we are obliged, and quite rightly, we're taking our deficit management plan to executive. And this is part of the kind of scrutiny process. And you're not scrutiny, I know, but it's part of the sharing process as we go along, because it is another one of these fantastic existential threats that we have potentially to our council, so it's really important. I'm going to hand over to Amelia now, though, and let her introduce the paper in front of you.
Thank you, Heather, and thank you, Chair. And thank you for the opportunity to discuss this really critical issue. This is my first airing at the Audit Committee, and apologies that I can't be with you in person today, but I do appreciate the opportunity to receive scrutiny in this area. If you don't mind, I'll start with the punchline, which I think is summarised and possibly helpfully in bold at paragraph 14. The critical risk in relation to the dedicated schools grant deficit is that if it crystallises, which would be the end of the statutory override, which is currently scheduled for March 2026, the end of the financial year, were that to crystallise, it would immediately trigger Section 114 due to the size of the projected deficit. So just in summary, last year we had a deficit of 33 million. In 2025, we had a deficit, as we're coming up to a forecast deficit of 65 million, and forecast in 2026, 100 million. So the scale of the challenge is significant. And what I would like to just draw your attention to is some of what's in the paper about what we know about why this is happening and what we're doing about it, because we're certainly not sitting still and watching the deficit grow. I'm sure you are aware of the dedicated schools grant and its purpose, but if I can just summarize for any of you who are less familiar, the dedicated schools grant is how government pays for education. It is a very significant sum in the region of £500 million, and the local authority is essentially the agent of central government in dispersing it locally. It pays for mainstream schools, it pays for special schools, it pays for growth and those things that are not paid for in the national funding formula where things can change and do change, and it pays for early years. It also pays for our central teams and funds quite a few people in my team and in other teams, including Nicola's just walked through the door. Some of her teams are funded by the Central Schools Block as well. So it's a very, very important source of funding for the county. And as we've seen, it is incredibly overspent. And the real concern is the pace at which that deficit is forecast to grow. The forecast at present, and you can see that at paragraph 5, is that the forecast deficit by 2930 would be £267 million. And the key reason for this is that children are coming into eligibility for funding more rapidly than they are leaving. There are many more opportunities for them to become eligible. Once they're eligible, it is virtually impossible for us to cease that funding. And that is the case across the country. We've just highlighted for you in paragraph 10, it is now widely recognised that the SEND system is dysfunctional. It's been described as absurd by eminent financial organisations responsible for scrutinising central government, and the Public Accounts Committee has significantly criticised the Department for Education and has made requirements for the DFE to report back to the Public Accounts Committee on urgent action that they are taking to remedy what are now accepted to be significant flaws in the statutory framework, which are putting these unbearable pressures on local authorities. And the pressures are not just in the high needs budget. We also have a significant level of spend in relation to transport, though I'm pleased to say that the progress we're making in reducing cost in the transport budget has been really significant, and very proud of the achievements of my team in this regard. But in relation to the rest of the high needs budget pressures, we are currently preparing a new deficit management plan. We do have a deficit management plan already. It's a requirement by the DFE and the Education Skills Funding Agency that we have one. It was submitted in February 2024. It was considered to be a good plan. I met with our DFE and financial advisors on multiple occasions. They were very impressed with our plan. But needless to say, the things that we have put in place since that time have not stayed the trajectory. And the core reason for that is there are limited things that we can do within our legal powers. But there is more that we are prepared to try and that we are taking forward. I'm very pleased to say, and many thanks to Heather for her support in this. She has recently signed a key decision to expand significantly the number of units in mainstream schools supporting children with SEND, and we are on track to deliver 15 new units across the county by September 2025. This is extremely ambitious. But we are hopeful that this will help tackle the really significant undersupply of specialist spaces, because inability to provide specialist spaces at state funding levels is driving really significant cost for independent school specialist places, which can be up to £150,000 per year. If you compare to the cost that we spend on most children, that's in the region of £5,000 per year. So the differential is really significant. So we are taking very rapid action. We are preparing a new deficit management plan, and grateful for the support of external expertise to enable us to do a really significant amount of analytical and financial modelling work to enable that to take place. That is due to go to the executive in May, at the next executive, and we will be very pleased to share progress back with the committee, should the committee be keen to see the detail of that plan once complete. But we have shared with you the outline of the areas that we are currently modelling for further action, and you can see those at paragraph 13. So as I said, that includes specialist units, looking at how we fund so that we can recognise the impact of crisis, but also taper that down, using some funding streams that have increased from external grants in the most effective way, including expanding the resource available for early years, changing our relationship with our pupil referral units, increasing our very successful supported internship programme, and looking at the effectiveness of annual reviews and contract management to understand whether their most high-cost placements are delivering value for money, and focusing in on those areas to ensure that they are delivering the outcomes that children need. So if that's all right, Chair, I'm very happy to take questions, and any dialogue and questions on this area are very welcome.
Thank you very much, Mina. That's really interesting. I've just a quick question. I know this is the right to, it's off balance sheet, since it's not in our accounts, the debt, but the income, or you said there's £500 million we get from government for education. Obviously, we're topping that up. That's what's creating the deficit, I believe. But where do we get the money? Because in our revenue account, it doesn't go for the revenue account. I don't know if there's any clarity. How do we actually fund it, if that makes sense? I don't know if that's a question for you or Heather or
I don't mind
Nicola.
starting and get to put me right if I'm wrong. In the past, and this happens in a lot of organisations, in the past you can offset that deficit against the school, the actual surpluses you have in schools' budgets, because if a school has more money than it's used, then that surplus sits with us essentially, and we manage that. So sometimes you'll see on some of the charts we have on other presentations that we've had, the schools we have had control over, the local authority schools, we hold on to the surpluses, but it's getting harder now for schools also to manage within the budgets they get just for their regular education. So the school surpluses go down.
So only the schools that we manage. So what about academies? Are they outside of this, or is it part of it?
They're outside.
They're outside.
Oh, outside. So this is only the schools that we actually.
Yeah.
Liz.
So I just make the point that the lines crossed more than a year ago when the deficit increased beyond the reserves that we hold for the maintained schools. And we need to make the point that the reserves we hold for the maintained schools are decreasing a bit too. Yeah. So councils are managing this as they would internal borrowing. So they're managing the cash flow. But other councils in the country are already having to take out borrowing to cover the deficit. that then impacts on their revenue budget. And this is one of the biggest risks for local authorities in the country. Without that,
right.
Not every council.
No, so to finance it, we're taking it from our treasury management in theory, from a cash flow.
So it's part of our
cash
cash flow
right,
management.
Right. That's what I'm trying to see. I'm trying to work out where it goes to the accounts. It doesn't, because it's a...
And I was just frantically looking on my emails, because I know the other day we did calculate the cost of this deficit in our accounts in terms of interest costs, and I'm sure it was something like 2 million for one financial year.
It's a 2 million cost, sorry.
It's an opportunity cost, of course.
Right, okay. We'll bring in Councillor Tim Kearney.
Thank you, Chair. I might be a little bit controversial now. I'm an ex-teacher and I have a lot of friends that are teachers. My partner works in school. And for the latter half of my career and the teachers I still speak to, I've got a little bit of a trope that they say, which is that modern parenting seems to be more and more focused on rights and less focused on responsibility. What are we doing any work that looks to reverse that cultural process? I just fear that without addressing some of these issues, that we're literally throwing money into a black hole that we're not going to be able to close. Thank you, Chair.
Amelia?
So parents are central to this, and they have been put central to this, not just because of their critical role in a child's life, but because of how they sit within the statutory framework. It's remarkable how the United Kingdom, compared to virtually any other Western democracy, has prioritized parental preference to a degree that is unparalleled. So parental preference for the school that their child receives is baked into the legislation, and a parent can take you to court and to tribunal and will almost always win on the basis of their preference of the school. Now, if you think about ordinary admissions, we do have a role for parental preference. If you've applied for a school place, I recently have done so for my son, you have 3 boxes and you get to put the school that you would prefer into box 1, 2, or 3. And so parental preference has a role. But if you don't get that school, you can appeal. If there's a space, you might get it, likely you won't, but that's the end of it. That is not the case in the special school space. If you do not like what the local authority has to say about where we have a space for your child, you can take us to court, and the court almost always agrees with you that however expensive the school that you prefer, that is the school that your child will go to. Now, that structure within the statute, set aside any considerations about parenting that any individual might have, that is the thing to a great extent which is driving the pressure on independent school placements, which was a £4 million pressure above the deficit we had forecast for this year alone. It's not the only pressure. There's also increasing costs within mainstream schools, which is about the number of places that children are occupying in mainstream who should be in a special school, but there is no space for them. And the reasons why, and I think what we're seeing is, to a great extent, probably to do with COVID, possibly to do with social media, possibly to do with development. It's really a hypothetical, but something happened over the past 5 years that has created a high level of dysregulation in children who already had conditions. And no one, whether that's parents or schools or professionals, is coping with that very well. So it's quite a complex picture, and nobody nationally really understands why it happened, but it definitely has. And it's not only in the UK, but that pattern has been seen in other countries like France and Germany.
Thank you for that. Yes, Liz, please, thank you.
One more comment of something that I've heard at a couple of conferences is that these deficits are not growing in the places where you might expect, where there is greater deprivation, but in what are called the leafy counties, there is a growing deficit of a different kind of scale. Have a look at places like Hampshire and Devon, and my personal opinion of what government have brought forward before in the safety valve and the delivering better value, I can't see that they've worked at all, and I think it needs something much more fundamental. Thank you.
Okay. Steve, and then I've got online, we've got Councillor Rodriguez. So Steve first, thank you.
Does the parental preference then rather discount the specialist units you're setting out? Because if parents don't like what you're setting up, or they think that they're getting a discounted solution, they're going to argue against it and will discount that.
So it is a factor. It is a factor, and certainly we will be going immediately out with the Parent Care Forum support to speak to individual parents. I've personally spoken to a number of parents myself over the course of the past year on this specific topic. And in fact, if I paraphrase a parent who said, you know, my child is costing £100,000 a year, it didn't have to be this way. If my child could have succeeded in their local mainstream school, that would have been my preference, but it broke down. And I think the ability of children to succeed in mainstream is the key issue. And what we need is some kind of way of helping schools to do what they want to do, which is support the children in their local community more effectively than they can. And sometimes it's relatively straightforward things. The color palette of the chairs in the room makes a difference, and we've been working with autism expert charities around the color palette of the chairs and the walls and the flooring. It's the number of children in the room. So 6 children is probably enough. 30 children is far too many. And so some of those very practical things are meaning that children can't succeed in their mainstream school, and that placement is breaking down, which is why parents are fighting so hard for something different. So yes, parental preference is a factor. We do need to provide something different and better. So it's not only because parents are actively choosing something different, but it's the interconnection of the fact that the school system is not able to provide what these children need, plus the fact that parents can force something else through. Those two things together are creating the deficit, but we do need to provide something different.
Thank you. Anyone else have a question for Amelia? Lee.
Thank you, Chair. Amelia, thanks ever so much indeed for coming along today. I love your passion and the way you've explained everything to us. Can I just ask you? You mentioned on paragraph 14, didn't you, about the fact that the DST deficit of 99 million will appear by next March. I think I've just a couple of questions there, and I sympathise with Tim Curley, my learned colleague's opinion there in the parental responsibilities. I really do, because from what you're saying, then it's a two-pronged question. So, from what you're saying, if this carries on and a parent can take us to court in terms of a child that they need special education needs, whatever, and a court will overrule us and they'll always win, then that surely is going to be like a pea going down a mountainside, gathering snow and snow and snow continually, because we're going to be worse off and worse off financially. We're going to be in a heck of a mess. Parents obviously will know that, not necessarily their fault. My other question was, in terms of the deficit, are we allowed, because once again that'll escalate under the circumstances you quoted, are we allowed to constitutionally borrow to fund that debt on the PWLB or something like that, to try and sort of rectify it until perhaps government makes a decision or somebody makes a decision on how we're going to move forward on this? Or is that again going to escalate, so 99 million turn into 150 million, turn into 200 million, etc., to avoid us calling a 114? So it's a couple of things, Amelia. I'm appreciating you might not be able to answer the second one on a technical point, but you understand my sentiments, and thank you for letting me take the floor, Chair.
So I can absolutely share your sentiments. That's my 3 a.m. moment as well, as you can imagine. So absolutely, all the forecasts are telling us that unless something significant changes, we will see exactly the same level of escalation that you describe, because effectively everything is currently funneled. We were just describing it the other day as a cat flap. It is a one-way door. more and more children coming through the door, and once they are in, we are liable for their costs until the age of 25. That is a very, very long time, and increasingly they're coming in very young. If a child comes into the system age 4 or 5, that is 20 years potentially of financial liability. And particularly what is a concern is children coming into the system in crisis, where the level of need at the point of entering the system is very, very high, and we're baking it in at that top level. So that risk is real, and and that's one of the reasons we're discussing it today. And before you entirely panic, what I would say is what is helpful to us is that this is now recognized as a national crisis. And we have been promised from the DFE, it's now in the public domain, it had been rumoured behind closed doors, that they are putting out a white paper, and we're expecting that this term. I would be utterly astonished if we didn't see a bill coming into the next parliamentary session to change the law. Because that is the only thing that is going to stop, which I think it's over half of local authorities have said if the statutory override goes ahead in March, they will be triggering Section 114 the next day. So this is now national crisis level, and it is much more helpful for us. If we had a local crisis, we probably would have far fewer, far greater concerns that something more dramatic will be done. Something dramatic is going to have to change. Otherwise, it's not just us who will be in crisis.
Thank you, Amelia. Thanks ever so much indeed. And it was just obviously the query on the borrowing scenario.
I'll bring in Nicola.
So I think to borrow for DSG, you have to get MHCLG permission to borrow. So there is one authority that has been given permission to do that. I can't remember which one it is off the top of the head, but I think you have to demonstrate you're dealing with the issue, i.e. you're putting changes in place to try and mitigate the costs that the authority are having in the escalation of it. I think to do with the 114 is more about the fact that if the statutory override came off now, then we would be in trouble in terms of if that deficit figure came into and we had to cover it on our balance sheet, we would be in trouble because we don't have enough reserves to cover it. So that's where the 114 bit comes in, is more to do with if that statutory override doesn't continue or the government don't find a solution, because frankly speaking, lots of authorities are not going to be able to deal with this. There needs to be that government solution. So yeah.
Heather, thank you.
So I just wanted to say as well, I'm going to be stating the obvious here, but although we know that we're in the middle of a kind of system crisis and a statutory issue crisis, the fact we've got this appendix with the detailed deficit management plan means we're not just sitting here going, well, we're going to wait for the government to come and solve it, because that just isn't, it's not an option. And because the system also isn't working for the children any more than it's working for us. So I just want to kind of remind us that, we're not just going, it's someone else's fault. Someone's going to come over the horizon and fix it for us, because it could take years and it may not fix it. So we have to keep working in the meantime. But thank you.
Thank you for that, Heather. Right, Councillor Rodriguez.
Thank you, Chair. I've got 3 or 4 questions from me. So first, Amelia, thank you for the report and the appendix about the SEND action plan. One thing that stood out for me in the report was the EHCP figure, where we've issued 5,672 as of December 2024, compared to 2,535 in December 2020. I don't know, maybe my view is maybe we're getting a bit soft on the way we do things, but that's just a personal view. But obviously recently we know government's been making some changes or announcing changes to welfare. And I do wonder if that will eventually, or the way that they're thinking around welfare will eventually trickle down to kind of this element, this ECHP kind of stuff as well. But on that particular number, is there anything that we can do to reduce the number of EHCPs? Or is it quite literally the criteria is set and we are acting within the criteria like legally that we have to? Or is there more that could be done with internally to kind of reduce that? I know it's a bit of a not a black and white situation on that front, but that's my first question.
Yes, brilliant question, and gets right to the heart of the issue. So one of the flaws in the legislation is that the threshold for consideration of whether a child needs to be assessed for a plan is extremely low. And what it says in the legislation is a local authority must assess, and it costs us in the region of £1,500, £2,000 to do the assessment alone. We must assess if a child may have special educational needs. That is the only criterion. And if you read the definition of special educational needs, it is a child who has making less progress than their peers. So it is virtually impossible to defend saying a child does not require a plan if they are below average in their attainment, which is 50% of the whole school population. Now, I can assure you that we don't progress plans for children to that level, but the statutory test is extremely weak, and there's virtually no child, other than if they are particularly exceptionally well performing at school, who wouldn't meet the test for assessment. We do say no to assess very regularly based on what is in the code of practice, but the tribunals have determined that the DfE's code of practice does not align with the law, and therefore they will not take account of what is in the DfE's code of practice, even though we follow it, and they will overrule us. A very high proportion of cases that have gone to tribunal have been on our decision to say no to assess. Once we have assessed, again, it's virtually impossible to say no to issue because the statutory threshold is similar. So we are, I would say, tough and fair, and we follow the government guidance, but the tribunal system does not accept the DfE's guidance and says that the law supersedes that.
Thank you, Chair. Thank you, Amelia. Okay. Well, hopefully things will change in the next few months with the new government. But I've got 3 questions then on the appendix that's been presented. Looking at the completed dates within that, which body who has oversight on those completed dates? Because some of them, for example, have completed date target for March 2025, quite a few of them actually. And I'm just wondering which body has the oversight for that. I'll ask all 3 questions so you can come in all at one. My second question is some of the actions within the appendix require some significant new capacity, but many roles are still pending appointment. So I'm wondering how kind of realistic it is to achieve, and what measures, if any, are there, kind of contingency measures are in place if roles continue to be unfilled, and then how that obviously will affect the implementation of the action plan or that particular action. And my third one is, I don't see within the action plan or at all actually, is how much each initiative or action will cost, if there is a cost associated to it, or how savings will be achieved in the particular action point. So I'm just wondering if any financial modelling has been done to ensure that the kind of the savings are sufficient to manage the SG deficit, and actually what savings will come about from each and every action plan that's being presented.
Yeah, brilliant questions. So in terms of who has oversight, so the plan that we've shared is a point-in-time plan. That plan is the plan that has been agreed with the SEND partnership. So the council has significant statutory duties, but we are very reliant on the actions of the health service and of the voluntary sector and other partners to deliver an effective system. And the SEND partnership is the means by which we hold that to account. It reports into the ICB Children and Families Board, which is chaired by the health service. Individual actions are held to account by their own organisation, and the leads that's why they sit across different teams, and we have leads both from Children's Services, Adult Services and the Health Service. But this is a point-in-time plan. So what we have had to do is agree this plan. We are now going into the process of costing the plan. That will be the deficit management plan for the council. So we don't yet have that. That's the activity that's underway. But in order for our financial modelers to cost it, they need to have a plan to be able to say this specific plan is likely to bring these specific savings. So you have to have the plan first in order to do the costing, but we're in that process as we speak, and we're just finalising it. Just going back to the point about capacity, we are, again, this is a point in time. So I'm getting echoes. Someone come off. mute there. Helen, is that maybe you?
No. Oh, we're all echoing. How very odd. I'll just see if I can see anything, but oh, has it stopped now?
I'll try again. So
Yes, it's
in terms of capacity, obviously flagged earlier that we are in that process of reorganizing. I'm very pleased to say that that's been moving very rapidly. So interviews commenced immediately after half term. I believe all posts relevant to the plan have been filled apart from one. And those appointments we are very excited about, really strong capabilities coming out from our staff team to take new roles. And they are moving ahead very rapidly already. So I think the risk level in that space has declined very quickly, even just over the past 3 weeks, because we have made very successful appointments. Teams are now moving out to make further appointments where we haven't been able to appoint internally. One of the teams will be carrying a high level of vacancies in terms of staff fronting roles, because the reorganization has shifted from we've taken out management and advisory capability to put more, as we described it, boots on the ground in terms of child-facing roles. We will have to go externally to recruit those. One of our teams has 28 vacancies, but they're progressing with that at pace, and very pleased with the support we're having from HR and finance colleagues to move that forward quickly.
Thank you.
Okay, I don't see any more people with their hands up for questions. I'd like to thank you, Amelia. That's a very interesting report. And I've actually learned some stuff today, which is good. This is good. Thank you very much. So we'll go to the recommendation. And there's two parts. One is to note the scale of the financial pressure and the associated risk to the council. And two is to note the proposed significant revisions to the DSG deficit management plan. Thank you. Right, we'll move on to agenda item 11, which is the anti-fraud and corruption policy review. We have Ben Bryant, I believe, is online. Over to you, Ben.
Thank you, Chair, and apologies committee for not being there in person. I also appreciate you've not had a break and I'm all but the last agenda item. Just for the online record, I'm Ben Bryant, Head of Corporate Finance, presenting to you as a committee this biannual update of the counter fraud policies. This isn't just a tick box exercise though, so I will just quickly highlight some key changes, but this suite of policy signifies that Somerset Council takes seriously its zero tolerance approach to fraud, and we do look to report and recover at every opportunity. So some of the key changes in the policies, in Appendix 1, we have the anti-fraud and corruption policy, which is the overarching document. That's been updated for the latest legislations, and notably it's the failure to prevent legislation. That's just something which highlights that it is all of our responsibilities to be aware and to prevent fraud, and also not just those officers and members of the council, but all of its associated parties with the authority. We've also strengthened, We've also strengthened the anti-money laundering policy. Particularly, there's a whole section in there focused on the role of the money laundering reporting officer, which in our instance is Nicola Hicks, sat with you, and what to do if Nicola was to receive a report. We have also a new policy in this suite titled The Proceeds of Crime. There's some really good examples at the end of that policy that we've put together, and it really provides what action does the council take against those that are profiting from crime activity, what type of recovery and legal charging can we follow up. There is an Appendix 2 outside of the suite of policies. This is the fraud action plan for 24-25, and something that we expect to make progress on at pace this year. Just to say, Chair and Committee, the suite of policies are also going to Executive in April and then onwards for approval by full Council. Happy to take questions, Chair.
Thank you for that, Ben. I'll open it up to the floor. Any questions? Silent. Oh, we've got Lindy online.
Thank you. So the SIPFA Code of Practice requires that counter fraud strategy should include, the framework should include a couple of policies, or should be addressed in different policies. I was just wondering, I can't remember if this council has got an information security policy and cyber security policy that links to the counter fraud strategy. I don't know if it might have come to another council meeting and it's just not there, or is it still in draft or in progress? Thank you.
Have you answered that, Ben, or not?
I just saw Nicola looking at Alan, but we do have.
Oh, Alan, yes, sorry, I forgot we've got Alan here.
What I was going to say is I know Beth, our counter fraud officer, I'm calling her counter fraud rather than fraud officer, has been working closely with Dave Littlewood, who heads up our cybersecurity team. But I'm not sure about the status of their updated strategy and whether that's coming forward.
Alan,
I'm afraid you catch me completely unaware, Chair. I know that most of the policies that were reviewed at vesting day, including the cybersecurity policy, had a 2-year cycle of review, so it is due for that review. I will take that away and come back to you.
That's fine.
Come back to you, Chair.
Thank you. We can update once we know. Okay. Anybody else got any questions? Lee, right.
Thanks, Chair. Ben, thanks ever so much indeed for coming along today. Great to see you as ever. On the header page, sorry, I'm trying to flick through as I'm talking to you. There was a little bit about reviewing the whistleblowing policy in Appendix 5, says there, I think. I can't find anything in Appendix 5 where you've reviewed the whistleblowing policy or anything. Am I missing something?
No, you're not missing something. So in the executive summary, I think is where you've seen it. We've got the whistleblowing and it is referred into the appendices, as you say. But in the executive summary, I've provided the link to the policy document that exists. That is due for renewal, but it appends to the whole suite of counter fraud, but is a separate policy. And again, sorry, I'll refer to Alan as to where that will be updated and brought forward.
Alan, you've got the game.
Thank you, Chair. Clearly my mission not to speak today is failing miserably. So I think first and foremost, this is one of those policies that was set with a 2-year review cycle, and members will have the pleasure of reviewing and signing this off at the AGM in May. So it is due a review. We're finding through the reviews and the feedback following kind of a review of how we approach whistleblowing and the number of whistleblowing matters that have been brought certainly to my attention. It's unlikely to see significant change, but we will do that light touch review and ensure that the policy is updated and bring that to members in May. Thank you, Chair.
Excellent. Thank you, Alan. Okay, online I've got Councillor Rodriguez.
Thanks, Chair. Just one quick one from me. On the anti-fraud action plan, within it, there is, I'm just going to scroll through. Within it, bullet point 3, prevent, there are some outstanding activities there with a due date of March and then also obviously April and other dates later on in the year. Are you able to update us on particularly the ones which have an outstanding due date of this month, please?
Yes, of course. So all of those with a date for completion for this month are underway and on track. We will come with an updated version of this, as well as the usual annual report on fraud reactive work to the May committee. So you'll see this updated, and I think something that I would highlight with Beth that you met in January is that she's very focused on delivering against this action plan at pace.
Thank you. And then just one very, very final one from me. Considering the kind of budget pressures that the council's under, is there any additional proactive measures to prevent financial fraud, or is that kind of covered as standard, would you say, within the policies before us? Because I imagine when there's, I don't know, people may be pressured to do things differently or act differently, and I just want to make sure that, considering the climate we're in with budget pressures, that we're still doing things the way we should do. I just wonder if there's any extra oversight or any extra kind of layers of kind of protection there, or is it a standard?
So we've got a standard suite of policies here, but the council do more and we are proactive. As I said, we take that zero tolerance approach. So I can give some specific examples if it helps just show what we do. Beth is in the process of doing a fraud risk assessment across the council. So that's engaging every service area, trying to identify what each service field that they are subject to fraud risk, what controls are in place and how we can strengthen that. So we are keeping that as a live document and updating that. That was one of those actions for March. If I jump to things like our payment to suppliers and our accounts payable, we have a system there that we review every day, any potential payment that we're about to make. We have a review then against all payments that have been made and are there potential duplicate payments. So that doesn't just prevent duplicate payments, that potential for fraudulent payments if, say, that payment's been sent in various ways. And we also have our scheme of delegations and things all in place that you would expect through any sort of control environment. Those things such as delegated approvals and segregation of duties in place. And those are some of the things that Alistair and SWAP would do in their key control audits just to provide that assurance.
Thank you, Chair. Thank you.
Right. Any more questions? No? Okay. I'll go to the recommendation. I'll read out. It's a little bit longer, this one. So, right, the Audit Committee is asked to, 1, note that the Council suite of anti-counter and anti-corruption policies has been reviewed and updated. 2, agree to recommend to 1, the suite of policies for approval by full Council, and 2, commend them to the Executive for note and endorsement to the Council. And 3, note the updated annual counter fraud strategic action plan for 25-26, setting out the corporate arrangements and actions to be taken to deliver the anti-fraud and corruption strategy. You opposing? Yeah. Steve second. It's all in favour? Excellent, that's done. Moving on swiftly then to the last item, which is the audit work plan. Right, so we've got the plan. Does anyone have? Sorry, Liz.
I think there's a typo in here where it says progress against the recommendations of the interim auditor's annual report. You've just agreed to put 22-23 into 23-24. So I think that should say 2023-24.
Oh, it's not on.
It's in here.
Oh, sorry, it's on my paper. It's different. Sorry.
Yeah.
Okay.
So there's just a change of date, Helen, on that item. The item for May 2025 on the forward plan, there's an item called progress against recommendations of interim auditors annual report. 22-23, but it should be 23-24.
Right, so on the work programme, we've got page 249. I'd invite any comments from our committee. Are you happy of the items that will be coming up in May and the future work plan? Silence is good. Okay, Dave.
So we're aiming to take our 24-25 audit plan to the May committee.
Okay, lovely, thank you.
And without seeming pedantic, heaven forbid an auditor should be accused of being pedantic, the reference should be auditor's annual report rather than interim, because now we completed the financial statements audit, it moves from interim to final. And that's a minor point.
Right, okay. Alan.
Thank you, Chair. Just one slight amendment. I believe that the committee requested an update from adult social care in terms of some of the pressures and issues in their budget areas, and that was due for today, but unfortunately couldn't be met. So we'll add that to a future agenda as well, either your next meeting in May or subsequently later in the year. But we'll make sure that's picked up. Thank you, Chair.
Helen will note that, won't you? Great. Okay. Right. Okay. So we're happy on the work plan. So basically, we consider the contents of the work plan and recommended for improvement. So all that's done. I'll close the meeting and wish you all a safe journey home. Thank you.